Hey guys, hope everything is going well. You guys know that drill. Smash that like button, subscribe if you haven't, and comment down below. Alrighty, so I wanted to do a video on the Fed funds rate and how I believe that we are very close to a pause, right? And I wanted to look at the Fed funds futures where big money makes bets on where the federal funds rate goes. Okay. And I'm going to do short videos because, this is more of a blog. And this is also for discussion to hear other people's perspectives to see what their research shows. And then eventually I'll do longer form videos. But this is just to get the ball rolling. Maybe you comment something and I see something that I don't, and you're listening to me, you see something that you're not seeing on your end. And I think it's actually a good thing, right? So here's my reasoning and why the Federal Reserve is very close to pausing, right? Look at the 30-day Fed funds futures, right? Sophisticated money betting where the Fed funds rate is going to be. Last year, I was trying to find through the Wayback Machine uh, just interest rates and their prediction. And there were many interest rate hikes. I believe a total of maybe a few hundred basis points. And I'm like, nah, they're not going to do that. Right. And I think it was more than a few hundred basis points. It was actually close to 400 basis points of interest rate hikes in 1 year. Now, I think a lot of people didn't see the geopolitical tension, and that's why you have inflation as bad as it is. So I think that's one way to get down inflation. It's, get some sort of peace deal going. That's my thought process. But anyways, Fed funds futures, you look at December right now, this is showing like a little over 4%. So you take 100 minus 95.89. So that's about 4%, right? So then if you go to January, it's forecasting maybe a 25 basis point move based on where this is at, right? So 100 minus 95.67. And what is that? Like 4.25, a little more than that. Now, right now, the Fed funds rate is what? Somewhere between 4.25 and 4.5. So it's pretty much in line. This may be a little behind where the actual Fed funds rate is in December 2022, because this says that 4.1%. But regardless, you're seeing another, it seems, rate hike, 95.36. So this is close to 4.75. So another 25 basis point move approximately. And now you're seeing like up to May, right? Maybe another 25 basis point move. So you're looking once again close to 4.75 to 5%. This is the targeted rate that they're talking about, right? Close to 5%. We're getting very close. So let's look at June. June is showing no interest rate hike, right? This is what the market, smart money, or not smart money, sophisticated money is betting on. And look at this, right? So this, goes from 4.8 approximately. And then there's a pause here. And then you see the increase here. So take, for instance, 100 minus 95.18. And you see interest rates now on the way down, right? And not by too much, but this is what they're forecasting. Last year, that was not the case. Last year was, okay, we're going to keep on raising rates, right? And obviously, this is subject to change based on more economic data, et cetera, et cetera, et cetera. And if you go to January or December of 2023, you see 95.89, okay? And this is 95.5. So we're looking at not that much of a change in interest rates based on where this chart's at. So the thing is, smart money, the banks, you have to put a lot of money playing around in this market. They're thinking, nah, we're not going to be raising rates as much. You have to look at it from a rate of change perspective. The rate of change isn't significant compared to 2021, right? You're going from basically 0 to 4%, right? Still not a lot, but that is a lot that people are used to, specifically younger folks. So when you see that rate of change, decrease, what will market participants do? They may take the other side of the trade right now, like buy bonds, go short against the dollar, get into emerging stocks, get into US stocks. The list goes on and on and on. Last thing I wanted to look at is Jeff Gundlach. He makes these comments. He says the Fed could be replaced by the 2-year treasury yield. All the Fed does is follow the 2-year yield, what they do. Okay. So if you look at the 2-year yield, you're seeing bond yields go down, right? If Gundlach is right, okay, and you're seeing a rally in bonds in the 2-year, I mean, what does this mean for the Federal Reserve? They're saying that Jerome Powell is going to follow this. I think Jerome Powell looks at many indicators. And if he does look at this, what does this mean? It means that interest rates are most likely going to go lower. And like the TLT, while there may be some volatility in it in the short run, I believe that that's going to rally. And anything that benefits off of lower interest rates on the long end of the curve, well, guess what? That's going to be bullish for many risk assets, in my opinion. Not telling you what to do. This is just, me thinking out loud. And yeah, I wanted to hear what you guys have to say, right? No right or wrong answers, but I'm just looking at these trends and I'm just thinking, wait a second, this Fed funds futures rate, it's completely different than last year. I mean, I wish I had some screen grabs from the year before to show you what they were forecasting. They were forecasting higher interest rates. Now it's basically a pause. Interest rates going nowhere on, at least in the short-term interest rates. Now, 2-year yield, if the Fed follows this, you're going to see some sort of reversal next year. Many risk assets. Anyways, guys, let me know what you think. Remember to smash that like button, subscribe if you haven't, comment down below, guys. Thank you. Bye.